Welcome to the Stock Group. Today is Saturday, February 26th. So let's see what has happened in the market this week. Starting with the S&P. Well, I'll start with the Dow Jones. So you can see here, we've really been in this downtrend for the last, since like February 22nd. I'm sorry, February 9th. And, down for what really almost feels like every day, but what's that? Today is the 25th. So down like 18 days. Well, technically you got got a couple of sideways days in here. But this week was just a continuation of last week's pullback. And then on Wednesday or Thursday was a huge reversal day. It was brutal. So the geopolitical news, in addition to the stuff that was already going on, that made the market feel uneasy. And so you can see here, so this is Monday, market continuing down from last week, Tuesday, even more. And so in between Tuesday and Wednesday, we got the news that Putin has actually went in Russia. And then, so I think it was really kicked off, I guess, Wednesday. And so being between Wednesday night and Thursday's open, it was a huge downtrend bar here. So the market was down heavy on Thursday, but then it reversed. And we had a big update Thursday, a recovery, and then a good update yesterday. So really, these last 2 days have recovered the previous 2 days in terms of the loss, in addition to how much far it went down. How much far it went down, some bad English. Considering how far it went down, it recovered. So that was good. It was a Dow, and pretty much all the indices, kind of did the same. This is the NASDAQ. So tech came down. You see this huge downtrend. So this bar got this low and it turned up. For the Russell, same for the Russell last couple of days. And then overall, the S&P 500. So just look at this as a single indicator for the entire market, if you would like. So this volatility has been incredible. So let's look at some of the names, and we'll see how it's reflected. So you can see Apple. Apple got as low as 152 on Thursday, but it actually recovered back to 165. So pretty much almost made back this move, recovered the move from the previous 2 days. So it's pretty close. Let's see what else. Let's look at Amazon. Amazon is the same. Actually, Amazon's recovered the previous 2 days moves, but it was low as 27.90. And then when you hold on one second, get some water. So when you go back and you look, you can see here, Amazon had reached lows that we had touched back in January. So they touched that. So definitely some good support here. Amazon. Let's look at Boeing. Boeing went down to 187 and rebounded. So when you measure out some of these moves in terms of the bounce down and the recovery, you're talking 8% moves, in literally in a matter of 2 days. But it's just a recovery. The thing is, I don't know how much more bad news that's out there than what exists today. So can we get some more news that is worse, that shakes the market up even more? I believe it's a possibility. But
in your opinion, what would that be, Mike? It's already the Putin thing. It's already
if more countries get pulled into, more European countries get pulled into this war. If he not only in Ukraine, but if he extend that out into other countries, I think that would be worse. But other than that, on that tip, I don't see anything necessarily worse. And I mean, you have to take everything in context, because if they were just any country being invaded, that's it's real bad. So, but could it be even worse if there are multiple countries that have been invaded? So yeah, that's one thing I would say. On the financial news front, I think the only thing, and so we got about, what's this, 26. So I know the Fed meets next month, so we only got a few more days in this month. So next month is going to be here pretty soon. I don't know exactly within the month of March when the FMOC meeting is, but the Fed is projected to announce a rate hike. I think I hope they just do 50 basis points, get it on out the way, and I believe that will also allow some more stability to come in. But so those would be the two things that I would say. But anybody else care to chime in on that? Let's see. Coinbase pretty much recovered the move 2 days ago, but in the overall grand scheme of things, you look at where we've been. We're just really double bottoming in certain things here. So for depending upon what you're holding, these last couple of days probably didn't mean much to you, because you can just say, hey, I'm still down double digits, and depending upon the specific holdings that you have, it could be brutal. You see Facebook here from earnings, they just continued low, but they did have a bounce yesterday and Friday. Thursday and Friday. So how were you all feeling? Kamal kind of spoke to a little bit of his feelings in terms of how he has played this market. What about the rest of you?
Let's see. Well, Mike, I'm more in the crypto space, but that's I've seen kind of direct correlations between stocks and crypto.
Yeah.
The news in one is affecting the other. So the thing with Putin the other day kind of threw me off, just because there's a lot of implications there, and long term, what does that look like, or short term, what does that look like for the economy? So I'm just kind of playing it safe, looking and waiting to see what happens. So I'm personally not buying it much right now, even with the dip. A little bit too much.
Yeah, for whatever reason, and I think it's just stocks or crypto. It's just the wealth that either institution or person has, and it's their total wealth. So thus far, stocks have been leading, crypto down, and they seem just to be tethered one to another. And it's just looking like the way it is. I don't know if crypto is going to actually break out and kind of disassociate from equities, but as it stands right now, that's not the case. So that's just the trend that I've been monitoring. So if you go here and you look at the total market cap, and that's just the total amount of money that's in crypto. It's looked like the Russell chart to me. So if you go look at and so going back to November, you go to the Russell and use it as a comparison. It's pretty much the same chart, right? So definitely stocks is leading crypto, and crypto can't break away. But again, if you're taking a long-term approach, dollar cost average is the trend that it will bode well for you if you're dollar cost averaging. I think if you're taking a long term view. Let's see. Anybody else in terms of how they're faring in this market? How are you psychologically or emotionally during this pullback? Because it's been brutal. It's been brutal since November if you're holding small caps. Since January if you're holding December and January if you're holding NASDAQ or Dow related stocks. So how's everyone else feeling about this?
For me, emotionally, kind of like you said, I've entered the game with more of a long view approach, and so I just know this kind of comes with the territory if you look at history, especially, but it is a little disheartening just because I wasn't able to. So I wasn't able like I wanted to because I thought this would happen a little bit later.
Okay.
Around December, January, when it's the first start going down a bit, I thought we'd have one more little bounce, one more little push upwards, and then I was going to grab some of those profits. So it's been a little disheartening in that sense that I wasn't able to get them while I wanted. But other than that, like I said, I take a look at the long term of it. So
okay.
Not as bad. Comes with the territory, I suppose.
Yeah, so you can see here on the Dow, this was the you see there that really the down move for the Dow started in January, whereas the Russell, it started back in November. So the Dow's move is not as hard as the Russell's move down. And pretty much the same for the NASDAQ. So everything kind of got in concert together going down from January. It's just that the Russell, its move was already extended down. So if you look here, this is a move from November to that January 4th. And then you can see you got an accelerated move down from there. And then this is like this move back to January 31st, January 24th. It was like the bottom in that move. We got a little bit of rally. Then you can see we went back down and tested. So here you got a double bottom in the NASDAQ. Double bottom here in the Russell, and it's probably going to correspond for the other indices as well. So yeah, so you can see here, it's actually went a little bit below this double bottom here in the Dow. And then change colors. 1 second. Yeah. So then again, look at the NASDAQ. So here's a double bottom here. It actually went a little bit below. So so it's just, it's been brutal. But one of the things I think, if you look, let's go back. Let me see something on this here. Move this down. One thing that you see here that is a good sign is you got good volume on that move on Thursday. So this is a decent, pretty good volume day. You see it corresponds to that double bottom there. So it's kind of confirming this double bottom based upon volume here. So that's a good sign. You see sellers are coming in at this area. Buyers are coming in to stop, the selling. Let's see. No, what happened to Russell in the body on these? Oh, okay, must have hit it. Yeah, so all right, let's look at some more names. Any other questions before I continue? All right. Let's see. Let's look at a few defensive names. Let's see. McDonald's. It's still pretty much in this pullback. Then let's see. Let's look at this one I don't really talk much about. Look at the Clorox. Oh, Clorox came out with earnings. Oh, they got crushed. Yeah, Clorox got killed.
Yeah, remember Clorox dynamic changed with the pandemic. So it really overshot itself. Remember when you couldn't find wipes and stuff like that?
Yes, sir.
Now this is the opposite when that demand goes away.
Okay. It's interesting. Let's look at AT&T. AT&T had this big move because it changed the earnings, the dividends, I'm sorry, when they announced earnings, but it's been pretty stable. So you can see here versus what we saw in some of those other stocks. So if you say for the week, 1, 2, 3, 4, 5. So actually this week, they've actually recovered everything for the week here, and where they were down 5%. So AT&T is just a defensive name. Let's see another defensive name. Let's look at McDonnell Douglas. I'm trying to think. I don't remember the ticker for McDonnell Douglas. Did you change the name? Let's try Raytheon. There we go. Like, man, can't spell this morning. So you can see here, this is pretty much, they hit the low in December, but this is a defense contractor. So they've been capitalizing off of this news and our rumor, because we've been talking about this possible Ukraine invasion for a while, but you can see Raytheon has done well in that since they're a defense contractor. Let's see. I don't really follow defense that much, so let me see what's in this aerospace. See some of the competitors. Okay, Lockheed Martin, that would be another name. Let's look back at them. So they've done, even better. So this is a pretty huge move here, and Lockheed off earnings, up 26%. So that's a crazy move. So, but yeah, I would definitely just tell people to, if you're trading, you got to be quick. If you have the long-term approach, dollar cost averaging is your friend. And there's some things that are, I believe, that are bargains now. Now, can things go lower? Yes. I'm not going to say that I'm calling the absolute bottom, because, I can't do that. However, I think that there are some things that are at some good points, like take Shopify here, right? Shopify, you have to go all the way back to, so you can see actually here where we had this peak back in February of 20, and we got all the way back there. I don't think I've ever would have considered Shopify would see sub 600, being it was 1700 in November. I think that's a good one. And I'll just tell you what I've been doing personally is been trading one name specifically, but I've been trying to buy better companies. So trying to move up the food chain, so Google is a good company. Microsoft, I'm trying to think if I ever owned some Microsoft, but I bought some Microsoft. Added to Apple. I would tell you this, Apple has done well through this entire correction. It's the wrong one. Sorry. It's Apple here. Apple has held up well. So if you say just from the peak, from Apple's high to the low, you can see that Apple is really not down that much at all. Talking 10%, right? So whereas some of these other things we saw that they were down much more. So Apple has held up really well. Apple pays a dividend in addition to it. So trying to, again, rotate out of some of the worse stocks, or either not continue to add to positions in some of the lower paying stocks and trying to get some better ones. Now, you could say that, so since some of this stuff is so low, again, if you're dollar cost averaging in, you don't necessarily worry about it. But if you're cherry picking some names, there's some things that, and I would say until we get some true clarity. So let's go back. Let's do this. So we talk about these downtrends, right? So we can say here. So we're in this downtrend, right? And pick back up. We got a little bounce, and then this downtrend kind of reversed. And you can see we're still here. So we down that one. So if you say collectively, if you just looked at this one big trend down, we're still lower. So until we get some confirmation, it looks like we're getting a bit close here. But but still, we still got some ways to go on that. Same thing here. So technically, this is a little bit of confirmation, but I want more than 1 day on that, and that's on the NASDAQ, and then the Russell. You can see Russell. It's actually, since Russell's kind of been just trading sideways in this range. So if I extend this here, you can kind of see this range that the Russell has been in since this low, and it corresponds to that low from January 28th, right? So, but if you look at it in larger context, if I just take this and just extend this out, we're still in this downward range, right? So I want to wait, but this is encouraging, because on this base here, you see that we've been really going sideways in the Russell for technically since January 20th, right? So we got about a month, 5 weeks or so, just going sideways in this range. So that's good. But again, I can't say that that low is gonna hold, that we couldn't go lower, but this is an encouraging sign based upon how volatile things were on Thursday, and it just touched that previous low. So we got that double bottom right there. So if this can hold, that's going to bode well. If it breaks below this, then you got to take a larger context and see what the next support area is below that. So it would be here, this next support below. So just some points to be mindful of in that. But let's see how the banks or financials have done. Aegon did really well. Let's look at some specific banks. Let's look at Wells. So actually, where tech and the Russell did well, you can see here, Wells Fargo actually had opposite days. They were doing well, and then when the market kind of bounced, they had 2 down days Thursday and Friday, but it's still off the highs. So Wells Fargo is doing good. Let's look at Morgan Stanley. You can see here they just been in this trading range sideways, but up off the trading around the highs. So Morgan Stanley has done well. Look at Bank of America. Bank of America still off the highs, trading in the range, but going higher. Look at that Goldman Sachs. And remember, this is a note we put in back when we were talking about financials, when interest rates, so, and shout out to Milton. He told us about this, and it's playing out, Let's look at Goldman Sachs. Actually, Goldman got pulled back a bit. I don't know if it's bit on earnings. Should be an earnings somewhere in here. But yeah, but Goldman, but they're still in a range of the highs, broke down below this 374. And so you can just see they're come back down into this range here between 374 and what's that? 320, 327. And so that was on a weekly. So you can see here, this January 24th, January 28th, you can see here this hitting this double bottom here. And you can see it's just above a previous support point. So I can either draw this one or move this line up. So I'll just draw this support point here. And, again, corresponds. So we may see that this double bottom that we're seeing on the indices as well as some of the individual charts, if this hold, maybe this will be our line in the sand, but I don't want to say it because I'm not sure, because I still don't know. It's just still a lot of uncertainty around, and more bad news can come out and take the market lower. So, but this is definitely two points that you want to continue to look at. So when we talk about, let's look at Tesla. You see Tesla has been getting killed, particularly this week, but from this January 4th, Tesla has just been going down, but had a huge reversal on Thursday, a little sideways on yesterday, but this Thursday move corresponds back all the way to support that dates back to August. So, and then again, heavy volume here on that Thursday move. So Tesla, told you about Shopify. Shopify has been getting absolutely murdered. But again, back to some support areas back here, dating back to April of last year, and as well as February of last year. So Shopify, here's one that got killed. And actually Square was in this long-term downtrend that we spoke about. Sorry about that. This long trend down that we talked about here. But you can see here, let me make this a little bit, move this up a little bit. Square came out with earnings. That's why you see this huge gap between this green bar here and then this green bar on Thursday. So they announced earnings, I believe, after the market closed on Thursday. And Friday, we had the big reversal on Thursday. And then the Friday move was up as well. But look here. What do you all see on this chart that really sticks out in this move? What really jumps out at you?
To me, it's all that volume.
Yes, sir. Absolutely. Look at that. Let's see how far we got to go back to find a volume of that magnitude. You got to go all the way back here to October 18th, and then again to October 2018. And then November of 2017. So even the pandemic low didn't have that amount of volume as we're seeing here, right? So bodes well for Square. They needed it because Square's been absolutely taken out to the woodshed. If you look off the high, Square was down, peak down almost 70%. So they needed that bounce. But you know, can Square? So technically, this is, you know, if you take that, So you see this downtrend line here that we have, right? And we kind of got to the right side of it, but it was based on time, not based on price. So in cases like that, you can take that and you can extend it out, because I don't really like that, because it really didn't break out, because of it just kept going down, and it was just time just going to the right, as opposed it was truly a breakout above the trend. So what you can do is just highlight the trend line and extend it. So, and I really don't have another reference point that I'm touching. So what I could do is this: I can end it there, and then I can say I started a new downtrend, but probably what's best is this. So you take that, grab that low, and just treat this as a box sideways, because it's just consolidation to the side. So really what I want to see in Square to believe that this move is solid. Now, I have a huge line in the sand because of this volume here, but I want to see it break out of this box and give me somewhere up in this area. And if I can get a close, above this 139, then I can say, hey, you know, this uptrend is this downtrend is kind of broken, you know, because really you can draw this as another downtrend. You can say that this downtrend is truly broken. We're out of this range of this box. Now we're establishing a new area. So if we can get something here in this area, let me change that color. So if we can get somewhere in this yellow area here, then I would say, hey, you know, Square is truly, you know, broken out of that downtrend. And even if it can't do that immediately, if we can just continue to go. So let me do this. Sorry about that. Trying to change my drawing tool. So if Square just continues to go sideways in the green, that bodes well, because what it will be doing is just continuing a base going sideways if it stays in that range. But if we can break out of that and get into this yellow area, then that will be confirmation that, hey, we've broken out of that. We got enough momentum, and then this would just become a support point at the top of this green if we ever get into this yellow area. So that's Square. Let's see. That team. This is a company that sells software as a service to tech companies to manage their IT projects. So they're down off their highs. You can see they hit a high back here in October. So they're down off their highs pretty good. So I don't know what, 30%, probably pull back or more. Yep, 36%. Let's see. Now, some other things that have absolutely just gotten killed. Planeteer. You can see that they've just continued their march downward. So you can extend this out. And it's really, again, it kind of feels a little bit like that Square move in terms of just consolidating sideways, where it's really not, where you're getting close here. And it's really not doing it from a price perspective. It's just been basing sideways. And when you see this consolidation to the right in this range, that's good. You just want it to hold. I hope it will continue to do so. Hope it will continue to do so in this green box, but you want to break out, you know, above this 14. But now here's the thing when we're talking. So you take this Planetar, right? So let's say we're looking at this is January, February. So say you're on a monthly, right? So you're on a dollar cost average monthly here. So say you do it in the first of every month, or say the first week. So if you were averaging in, you would have bought Planeteer here at 26 level in November. You would have bought some here at the 19 level in December. January, you'd have bought some here at the $16 level. And here, February, you'd have bought some at this $14 level. And then March is just a couple days away, and you'll be buying some here, presumably in probably 11 to 12, maybe 13 range, right? So you would have stair-stepped this down, and you would have got, so if you take 26, 20, 16 and 13, 26 and 20, that's 46. 13 is what, 53, 59. And then another, say 13, was it like 70, 60, like $80, 83. Divide 83 by 5, that'll be your average price. So if you say 83 by 5, so you're talking an average price of what, $16 and 16 cents. That's what your average price would be if you were dollar cost averaging in the last 5 months, buying it around the first of each month. So that's what dollar cost averaging will do for you, versus if you made a decision to purchase everything at one point. Depending upon where you made that purchase decision at, you could have a better or worse price. Now, if you were picking it within the last, say, month, yeah, definitely you have a better price. But, so dollar cost averaging helps in that way. So Kamal, to you, in terms of it, as you were dollar cost averaging, and I know that you were looking at Checkpoint. So let's take this as a real example, a charge point. Same thing. Actually, the numbers pretty much fit kind of what we were saying. So you probably would have a $16 or $17 average in the last 5 months if you were dollar cost averaging in this. So I wouldn't worry about, you at this low. And again, if you're taking a long-term approach, this dollar cost averaging is really going to help you, in this steep pullback. So I'll stop there. Any questions? I mean, it's a rough market, guys. It's brutal. And this is just where the pain can be too much. I believe last week, I know Angela said that she was sitting on the sidelines. Walt sitting on the sidelines, crypto wise. And so and that's a good move, just to be sitting and watching. And, because number one, if you don't have any money in the market, you're not necessarily feeling the pain of this pullback. And if that fits your personality, by all means, do that. So any points?
Yeah, I'm glad you brought up Planeteer, because that's one of the things I invest in. I still am. And while I don't have necessarily time when I invest in it, but when it goes down on a big dip, that's when I start investing. I look for big dips to go down in there, because this is something that I'm probably going to keep for about 5 years, minimum. Okay. Or I may keep it forever, depending on if the story keeps going the way it should. Okay. And my story on this is that they will be one of the biggest artificial intelligence company. To me, they are going to disrupt the world with their software. That's my theory on this. We'll see how it really plays out.
Yes, sir.
So I'm willing to stay red for an awfully long time in this one. And a dollar cost average, when it really goes down a lot, that's when I like to put money in.
Yeah. And you got several good points there. Let's delve into that a little bit. So what I would say as well is, if you're having some take this time, particularly to learn, because some of these names we talk about and we're just looking at them from a chart perspective, right? But I would say too, it's imperative that, particularly in these times where things are just going down, you got to know what it is that you're holding and know something about the business, right? Because you can just look at, I can just pull up any chart, right? I can look at, I can just pull up any chart here. And okay, this is RIDE, so I know this is Lordstown Motors. But if I don't know anything about what Lordstown Motors is doing, and I'm just looking at a chart, having a fundamental understanding of what the business or the company does, the segments that they're in, can help you in weather. So kind of like what Milt just said, as it relates to Planeteer, yeah, it's getting killed, but this is not a stock move. This is an overall market move. And so you see from here, from November to February, that's not because things fundamentally changed with the company. The only part that you can probably say that was company specific is maybe this little area, right here, because it came out with earnings and they pulled back some. So they maybe had some earnings news in there, but this larger, and so what I'm saying in there is like this little green area within this larger orange box. But this greater orange box, this is just a rotation out of growth stocks into value stocks, coupled with the beginning of the year, they just decimated everything. So this is a market move. This is not a stock move, right? Meaning that things didn't fundamentally change with the company. It was just that the overall market decided to shift and it's taking everything down. It's almost like, you got a big old ship in the water and it goes through and you can just see the wake, behind it as it cuts through the water. Everything that's trailing in its path is getting affected. That's what the market is doing to these stocks, where the fundamentals of a lot of these companies, they're still continuing to make money. They're doing what they're doing, but it's just that their stock price, has detached from what the fundamentals are. So knowing what your company does, what their prospects are, I would encourage also. So let's say this. So Planeteer came out. So let's say you own a stock, go back and listen to the earnings report. So you can just type in whatever your company name is, earnings report. And usually if you don't find it, just type it in Google. You can go out to the company site itself. And usually they got an investor section around here somewhere. Let's see. I haven't been out here, so I'm kind of doing this on the fly. But what we do, where we're going, where's the investors section? And they usually have an investor section out here. Yeah, here you go, investor relations. So you click on that, then it's earnings report. Go out here and look at this earnings report. Read the earnings report, kind of see, and okay, and then you say, there's too many numbers that don't make any sense. But what you want to do is a lot of times they'll put they'll do their So you can go out here, you can fill in your name, and you can listen to the company's earnings report, and you're gonna get some detail about what they're doing. Let's see. Let's see if Motley Fool has their let me see, because a lot of times they'll put the I don't want to do that. Come on, guys. Oh, okay. I didn't even see this. What I'm looking for. Because a lot of times they will put their earnings. Trying to see. Okay, here you go. Planeteer Technologies fourth quarter earnings, and you can do this for pretty much for any company. And you can go through and you can listen to the conference call. And so this is you can either listen to it in audio, or I like reading them. And you can go through in here and you can find out kind of different things that they're doing. So, so they'll go through, just kind of give an overview. Then analysts will get on and they'll ask questions specifically that, they have, that they want answers to, that they want the company to give them some information on. And sometimes it's product related. Sometimes it's talking about the accounting and other things, but you can find out some good things about a company. And I bring all this up again to say that, in these pullbacks that we're in, knowing what your company does can help you with your thesis, right? Around why you're holding, and making a distinction between, is the stock going up or down because of just the market, or is there something fundamentally different about what the company is doing in their current business? And I think this will help you. In some cases, it can maybe give you a bit more conviction, or you may discover something in that report that, say, hey, it's time to leave because there are some fundamental changes in the company and I don't necessarily like the direction that it's going. So, any questions or comments?
I like what you said about that, because when you clicked on that in investor relations, it showed that its commercial had went up 100. Oh, there it is, right there. Commercial revenue up 102%. That is what I'm keying on. If that starts slowing down or get low double digits, then I'm out. I don't care how much money I have lost. It doesn't matter to me. It's time to get out because the thesis have changed.
Okay. Yeah. So, going and looking at this stuff, some of these things that jump out at you. And actually, let me see if I can find this video. If you don't, what's that guy's name? Let me see if I bookmarked it. Let me see. Yeah. Bill Ackman. All right. So this guy's like everything you need to know about finance and investing under an hour. It's, it's a little clickbait in terms of the title, but what he does, he walks you through using a simple lemonade stand and how it relates to understanding like balance sheets and financials. So when you look here, and so when companies report earnings, there are three like accounting, I won't say forms, but accounting, I don't know what the right word, formats. There's three reports. That's what I'm trying to say. Three reports that they build from an accounting perspective. It's a balance sheet, it's an income statement, and then there's a cash flow. Those three are the pillars of accounting and what you look for in financial reports. This video here on Bill Ackman, what he does is he takes you and he walks you through kind of explaining this stuff from just using a simple lemonade stand example and just showing you like assets, liabilities, equity, and then walks through. So you can see here he's doing the balance sheet. He'll talk about some of the other things. If he got he doesn't have the individual sections within the video, but it's videos like 43 minutes is really good to kind of give you a perspective. And really what this gets into, where, we spend 90% of our time or more just talking about charts, and charts is an area of analysis, that's called technical analysis. Whereas what we're talking about here and what Bill is giving Bill Ackman here, and he's a big time investor, hedge fund guy. What he's walking you through is what is called fundamental analysis. And so what they look at is kind of what Milton pointed out here. This is the detail around what the company does, how much money they're making, what's their, so you can see here, cash flow that comes from that cash flow report I was talking about. Looking at revenues and sales are the same thing, and they just broke. So you can see here, total revenue grew 41%. All right. And then it broke it down into two segments, commercial revenue and then government revenue. Right. Then it talks about their customer base tripled, to 143, 147. So they're a little bit less than 50 customers. So they gained 100 customers, you know, in this last report. And then you can see, you know, and so this is the full year highlights for the full year. And then this is the last quarter. So that was so I misspoke. They gained 100 customers over the year. And then you can see they added 43 in the last quarter, right? But these are the things that go into looking from a fundamental perspective, because what happens when earnings come out, there are projections on growth that the analysts look at. And so when a company reports earnings, it's based upon what the expectation that the security analysts are looking for. And if the company exceeds or comes short of that reporting period, then a lot of times they may get upgrades, they may get downgrades, the stock may get hit because, you know, they're not doing as well as people anticipated. Because, you know, what the market do is looking forward to say, okay, this is what you told me. Did you meet expectations, or did you exceed expectations, or did you not meet expectations? And because of that, you know, people will vote in terms, and we'll see that show up in a chart. So if we go back here, so you can see here, right? So this is on the Raytheon, just use this as an example. So you can see that they came in, they said they wanted estimated earnings was 102, but they actually reported 108. So they had a 0.06, so 1.02. This is just in dollar terms. So they had a 6-cent surprise, right? So this is a positive thing. So when you look back here on this chart, they reported earnings. You can see that 6% surprise was received well for the market because buyers came in here, right? Whereas, so let's look at an extreme example, but it's one that's recent. Look at Facebook. Facebook reported earnings. They had a 4% surprise to the downside, where they were estimated to make, 3.67 cent per share of earnings, and they came in at they estimated 3.84 and came in at 3.67. So that was a 4% decline. And then probably their guidance too for the coming months. So the market took that, and it was like they punished them for it big time, right? And so this is how the fundamentals can make a difference as well. And then you can see how the market digested that information, and they just took them down, and they've really, in addition to the overall market, now this is company stuff happening here, not just the market, but this huge gap here. This is something fundamentally changed in the company, and they got punished for it, and it extended even further. So this is just literally one day. The market closes at 322. They report earnings. When the next trading day, it opened up at 244. So, and then as the market has digested that information, in addition to all the geopolitical stuff and interest rate stuff, they just continue to take this lower. So, and so if you were holding Facebook, you wasn't aware what the earnings were, what they reported, and you just, woke up one day and you found that, hey, your investment is down 21%. That's because the fundamentals came into play. So knowing what you hold and why, is important. Not to just the charts, because the charts couldn't show you that was coming, right? So this green piece is the fundamental news, and now the chart picks back up and saying, oh, it didn't like that news and it's going lower. But we've broken down through 1, 2, 3, 4, 5 support areas, and down, from the high here, you're down 35%. So, any questions? Oh, let me put this video. I'm gonna put this video in the chat, So definitely take some time, listen to it. It's really good. It helps with just an understanding of that fundamental side. And if there is a desire for you all to kind of walk through some fundamentals, we maybe can take this as an example to use this to just get some basic stuff out of the way. But if we want to do some fundamental analysis, we can do that as well, and maybe pivot a bit from the technical. If there's enough interest in doing that, we can. So y'all let me know. Going back, so I mean, I can go on and on, but I'll just stop there. So any questions about anything financially related, or any comments in general?
I just want to throw out that everybody should have some of the cyber security stocks on their list, because if a cyber war break out, you're probably going to want to own some of those. They're already going up just with the threat of one. And I know Russia's attacking Ukraine, and these things have a way of getting out.
Yeah. So here's an ETF on cybersecurity. So if you don't know the individual names, this is one way to play that. Trying to find, trying to see what individual companies are in it. I may have to Google it. Yeah.
Palantir, Palo Alto. Ugh. That should be one. PanW, PANW.
Sorry. Yeah, I just want to bring up the fundamental stuff. So you can look at let's see the overview. Engages in provision of network security solutions to enterprises, service providers, and government entities. All right, so it's just the overall, just a small blurb. If you want to find out more specifically, just Google them. Yeah, so multinational cybersecurity company. Core products or platforms include advanced firewalls, cloud-based offerings, and extend those firewalls to cover other aspects of security. Company serves 70,000 organizations, 150 companies, And then, you can read some more detail. So we actually use this at our company. So yeah, I'm familiar with it. So most, so that thing that Milt, talks about is part of war now is not only is physical with tanks and guns and missiles and all that, but part of their arsenal is cyber attacks as well. So they got a bunch of programmers and nerds around to disrupt the countries and or companies within that country, different things that they're doing because they can wreak havoc, because a lot of things are just hooked up from a electronic perspective. So like the water systems, air traffic control, electrical grid, all of those things, sometimes they have them hooked to the internet and even private connectivity. And so if a foreign actor put his cyber army, pointed at your facilities, they could wreak havoc if they can breach it. So these companies kind of serve as a threat protection against that. Think about like physical security around your house. You have security cameras, maybe pet, dog or something, or you got a big old bazooka gun in your house. That's your form of your physical security, where this provides the technical security, but same kind of concept as a border around those things that you want to protect. So so I know. Let me see something. So a lot of times also too, if you're looking for a company and you want to see, so you can put their ticket in and just ask for competitors. And a lot of times you can just find names. So Cisco, heard of Cisco, Checkpoint, is one of Kamal's is looking at. Juniper, Barracuda. So you can see these, and then you can go down and start looking at some of these names and seeing if they have, if those companies are, if they're public and that they trade on the market. So, and also let's look at Bug TF. So a lot of these, there are many different ETFs. So again, this is a ETF on for cybersecurity and stuff. So you can see the Bug ETF seeks to invest in companies that stand to potentially benefit from the increased adoption of cybersecurity. Those who principal businesses in the development and management of security protocols, preventing intrusion, attacks to systems, networks, application computers, and mobile devices. So you can go here, and this is one thing you can do too is, let's say you're not necessarily interested in the ETF, but you can find the ETF and see what companies that the ETF hold, and that can give you some ideas. So we just talked about, Milton mentioned Palo Alto, they're in here, Checkpoint Software, Fortinet, like Norton, LifeLock. Oh, okay. So it's like the LifeLock company. You see those commercials on TV. Avast, Zscaler, Microtrend, Okta, Tenable, and CrowdStrike. So these are like the top 10 holdings. And then if you expand that, you can see others that they're holding. So, So thanks for that, Milt, on the cybersecurity. And then you can see here, this thing's had a huge move on Thursday and Friday. So you're talking about, that's $100 move. So is it 20% move up? Yeah. So 20% move in 2 days. That's crazy. All right. Any other comment? How are you? I know I asked this question a little earlier. I think let's see. Okay. Barry, you been buying anything this week? Adding to your position or what? You might be at work, maybe can't talk. Okay. Kamal, you got anything else?
No, Mike.
Okay. Yeah.
Hey, Mike.
Yes, sir.
I'm at soccer right now with the kids.
Okay. No worries.
I did add something to my position, and I cut my loss on it because the market was just very weird.
Yeah.
This whole week, but I did play some options. I did some puts.
Okay.
I did okay with that.
Okay. Cool. Good stuff. All right. All right. So yeah, Kamal stated, I know it feels painful right now, but and let me see this. So this is my list for like stuff that I wanted to be what I call more of the more established companies that I think is going to weather this storm. And I do not believe that they're going out of business. So Apple for sure, Amazon, Costco, Home Depot, MasterCard, Microsoft, Netflix, Nike, NVIDIA, Qualcomm, UPS, Visa, Google, Target, right? Walmart. You know, what you could do is maybe take 2 or 3 of these names and start to dollar cost average into those. And maybe that'll give you a bit more comfort as opposed to some of those other names that you were holding. But just an idea. But if you know, and so that's just my advice. But you have to, if you don't feel comfortable and you think it's best to just get on the sidelines and just get out, if that's going to help you sleep better at night, then that's what you need to do, you know. But if you're taking the long-term approach, I would just dollar cost average. And if you want to change and buy a little bit better companies, you can do that. And where you don't have as much volatility. But some of this, again, is market related. It's not company related. Like Amazon came out with huge earnings back here in February, right? Costco, you know, they got earnings coming up next week. Home Depot had earnings. They got hit on earnings a little bit, but they're still in the upper ranges of their move. Nike had earnings here back in December, so they should be coming up with earnings next month. Qualcomm, you know, chip maker, they had earnings here. It looks like they did good off of earnings. You know, they're not going out of business. Visa, you know, Visa was in that downturn earlier in that move from November to December, but you can see that they bounced up high off here. So I think there are some quality stocks. Walmart, you know, Walmart's not going anywhere, even though this looks like a big range. It's really not if you just measure this out from a percentage perspective. From the highs, Walmart's down less than 10%. So yeah, that's what I would say there. Milt, got any parting shots?
Yeah, I can understand people being on the sidelines, but this is really good trading if you look for different things. Like, it's sort of like everybody knew that there was going to be a war. So, of course, soon they announced the war, time to buy. I mean, just things like that. And also, if you also look at this week, you see how this day is just going down, 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 down. And then this big gap down.
Yeah, let me get back to let me just look at the S&P. Okay, here you go.
Yeah, what I do is I follow people who tell me those indicators, like the VIX, the fear indicators. Mm-hmm. When it gets to a certain level, that's not 1%, but it is a good indicator that it's time to buy something. When it bounces way up high, mm-hmm. That's where you just gotta hold your nose and buy something with a high beta and hope. But those trades really tend to be really good trades. Like my best trade this week was Upstart.
Yeah, I traded that several times this week. That move in Upstart was absolutely.
Oh yeah, do you love that?
Oh my! Well, it was. So I played it one day. I traded like 3 times from like the 120. I'm sorry, 128 to like 131. I traded like 3 times in a single day. And then I went into it the next day, and then I got caught right here. So it went from that 120 to 113, then to 103. And it actually got as low as, what was that? Let me see. Here it got as low as what? 101? Yeah, but then that move from that low, so let me go to an hourly. So is that, yeah, right here. So this move from, what's that, whatever the 22nd was. So it's going down, it closed at 111, then it opened up down this 108, but then this move off of this 101 here was ridiculous to 129. I guess that was on Thursday, and then yesterday's move. But this was incredible. I could not believe that stuff. It basically did a 30% move down, and then a 30 point move down and a 30 point back. You know, so if you just take this as one move, all of that, you know, to where if you just remove that out of the chart, it just went sideways, right? But that was crazy volatility there. Crazy volatility.
Yeah. See, that's the thing about it. I look for stocks like this, and when I know that we're going to get one of those, I forgot what they call them, face rippers or something like that, where you know something is going to go big. I look for, this had great earnings. That's why I follow it. It had great earnings, great guidance, and it's getting killed. So I know this will be coming back. This will lead the charge back. So that's what I'm waiting for. I sold it on Friday. I bought it at, I think it was 100. I can't remember. I got like maybe a 10, 12% gain on this in one day. So that was it for me, because when the market turned green, I should have started off the day buying it, but I wasn't that comfortable just yet because of all that red in front of it. Right. I'm not that bold. Right. That's a bold trader that does that. And those are the traders that really make money. So as soon as it turned green, I bought it. Okay. Yeah. This like I said, this move and this upstart was incredible. Let me turn off this after. This move was. I was like I said, I was watching this pretty closely this week. So it was, and so like I say, I played this. Where was I? I was right here. So I was playing this box. I played this a couple times. Then I think I bought a last little piece and rolled into the next day. So I went from 127 down to 119, down to like 114, and then down to 102. I was like, oh my gosh. So I had to wait that portion of it out. But when it went on this run on I guess that's Thursday, that was incredible. So I was able to get back out, and I think I sold a piece like at 137, 132. Yeah. So I think I sold one piece 136, 137, then a second piece at 132. So I'm gonna go back in on it. So yeah, that was definitely a huge move down and back up. Yeah. So one of my buddies, he was playing Tesla, and I don't really ever look at some of this stuff intraday, because I'm trying to work, and I'll play some of it. But he was saying these moves in Tesla is like, so you just look at this bar, it's from 192 to so it's like a $8 move, probably another $8 move, another $8 move. So you take that, and he was playing options on that. He was saying that you can just trade on some of these support and resistance on these, and make some decent money if you use options on them. And that was just something that I never really played for those. So I want to look at that a little bit if I can get some time. But it's kind of hard for me during the day working. But definitely interesting. And so this, and so going into next week, I don't know if we're gonna get a pullback off of this huge run up that we had Thursday and Friday. And then, whatever news comes out over the weekend about this Ukraine thing, can continue to spook things. So, but
guys, I appreciate it as always. Thanks for your participation. Hang in there, Kamal. I know, it probably sounds like okay, that's fine. Yep. So y'all have a good week, and thank you all, and we'll talk again.
Thanks as always.
Yes, sir. Bye-bye.